Good afternoon, everyone, and welcome to our online debate on discussing the path to high-quality assurance over non-financial information in Europe. So our participants today may ask any question at any time via Slido, via our app Slido. The link is under the YouTube player. You may pause the live stream as well, and the recording will be available afterwards. Please feel free to tweet during the event with the hashtag NFI Assurance. So to kick off the conversation today, I just would like to say a few words on the fact that assurance on non-financial information is not new for European companies. Back in 2010, already 41% of the stock 600 components had some of their published corporate social responsibility information verified by a third party. And then came the non-financial reporting directive in 2014, where a check exercise was from the auditor was required. So it was actually just checking it is actually just checking the existence of the information, and an assurance by the independent service provider is an option. How member states have transposed this, we looked into it in a fact sheet that you may find on Accountancy Europe's website. And actually, in many countries, the transposition was only with the minimum requirement to check if the information had been provided, and some also included a requirement to check its consistency with the financial statements. And you can see in blue here that 3 countries decided to transpose an independence assurance requirement, namely Italy, France, and Spain. And it's worth noting as well that a lot of companies seek voluntary assurance on their financial report and do not wait for regulatory developments. Anyway, we are now at the stage of revising the NFRD, and we will hear more about the policy developments in a minute. So after this short introduction, what's on the menu for today for this lunchtime webinar? We have a very nice starter for you to open up your appetite. So Alain Deckers will give us a keynote speech. So no need to present Alain Deckers to our audience today, but I will still do. So Alain is the head of unit for corporate reporting, audit and credit rating agencies, DG FISMA at the European Commission. As the main course, for the menu, we will follow with a lively panel discussion with, let's start with the ladies first, Maria Alexiou. Maria is an ESG senior advisor at Titan Cement International, and she's also a member of the board of CSR Europe. Maria is a preparer of ESG information and has a wealth of experience to share with us today in this area. We will have Angélique Laskewitz from Angélique is executive director at VBDO, a very recognized Dutch NGO that represents responsible investors. We will also have Patrick de Cambourg. So Patrick has many hats, but he will be with us today as chair of the European Lab Project Task Force on EU non-financial reporting standards. And we will also have with us at this panel discussion Julien Rivals, our vice chair at Accountancy Europe, dealing with NFI assurance. And Julien is in his daily daily life, a co-head integrated performance at Deloitte. So normally, if all goes well, we will finish the menu with a dessert from Finland, Sirpa Pietikäinen, a member of the European Parliament for whom this policy agenda is of great interest. Without any further delay, I would like to welcome Alain Deckers for his keynote speech. Alain has agreed to respond to a few questions after, so do not hesitate to ask questions via Slido. The link is, as I said, under the YouTube, in the YouTube comments on the channel. So, Alain, the floor is yours. We are all ears.
Thank you very much. It seems we have some canine company that I can hear on the line, but that's very nice. Thank you for inviting this event in a very timely manner. And also for the invitation to speak. I'll just start with a disclaimer. I speak only for myself. Nothing I say should be taken as the official position of the European Commission. It's just a standard disclaimer. And I'll structure my intervention in sort of 4 main blocks. First, I'll start a little bit with a timetable, then with context. And then 3 main sort of blocks on the substance of what we are doing. Say a few words about the role of standards, scope, and reliability of non-financial information. And I'll finish with another point, which I think is not directly linked to the revision of the non-financial reporting directive, but is nevertheless perhaps of interest, which is the accessibility of the information and the work we are doing on the European single access point and how that could encompass sustainability information in the future too. So very quickly, a little bit of timing and context. As the Commission announced in its 2020 work program, or in the European Green Deal, we intend to publish a proposal of to revise the non-financial reporting directive in the very near future. I hope everybody is already aware of that. Initially, it was foreseen for quarter 4 of this year. Because of COVID-related difficulties and the extension of our public consultation, it will now be in quarter 1 of next year. But nevertheless, no major delay. And then, of course, we'll have to see how long the interinstitutional negotiations take in the Parliament and the Council to complete the process. The proposal to revise the non-financial reporting directive, it doesn't live in a vacuum. I've already mentioned the European Green Deal, but it is, of course, embedded within a number of different legal and policy initiatives, some of which have already been finalized and some of which are forthcoming. And perhaps the most relevant of those are the Sustainable Finance Disclosure Regulation and the Taxonomy Regulation, both of which have already been agreed and on which work is currently ongoing to finalize level 2 measures. There is also a link with the work that our colleagues in DG Justice are doing on sustainable corporate governance and due diligence in the field of environment and human rights. So we are also coordinating closely with them. And of course, you are no doubt aware that the Commission is also preparing a new sustainable finance strategy, which I believe will be also adopted or published in the first quarter of next year. So the non-financial reporting directive, or the work we are doing on the revision of the non-financial reporting directive, has to take all of that broader context into account. And the relevance of that will emerge in the next point that I'm going to cover, which relates to the quality of non-financial information. The clear message we are receiving, and I think this should not be a secret to anybody or a surprise to anybody who's been involved in this area for some time, is that the non-financial reporting directive is not really achieving the objectives that it should be achieving. And partly that is because the directive is rather principles-based and high level, which was perhaps inevitable at the time that it was adopted, which was already some time ago. But that the result of that is that information that investors receive is not fully comparable or not comparable, and also lacks relevance in a number of cases, in the sense that not all material information is disclosed, and quite a bit of information that is not material is disclosed. So that is a clear message that we are receiving, and that is the message we receive from investors, but also from the point of view of preparers. There is a clear concern that the current lack of specificity of the directive, which in some countries has been transposed into national law pretty much by copying and pasting the directive, means that they are also subject to some legal uncertainty, in the sense that they are subject to lots of different requirements from different parties, but it isn't always exactly clear what they should be disclosing in order to comply with the law. So how do we get around that? A very clear message that we have received from our public consultation is a call to move towards the use of common standards in the EU. And that is an issue that we are clearly looking at, and that, as everybody should also know, we have asked EFRAG to look at through a task force that has been established under the European Corporate Reporting Lab. And Patrick de Cambourg, as Noémi has mentioned, will participate, who chairs that task force, will participate in the next panel. So I won't go into the details of that, because Patrick is much better placed than I to cover that. But clearly, there are a number of questions that arise when one speaks about European standards. One of them is the link between what might be done in Europe and what has already been done or may be done in the future at international level. And as Vice President Dombrovskis already made clear in a number of speeches, in a couple of speeches he made in earlier this year, it's certainly not to go it alone or to reinvent the wheel. We in Europe need to acknowledge, and we do acknowledge, that markets are global, that companies operate globally, and therefore that we should pursue to the greatest extent possible international convergence. But as I mentioned before, the NFRD doesn't exist in a vacuum. It is linked to a number of other pieces of legislation which create their own requirements. And clearly, where we have specific European requirements, it is unlikely that an international standard setter could fully reflect those requirements, since in that case it would no longer be an international standard setter, it would be a regional standard setter. So it is likely that we in Europe will need to forge ahead, also because there is a considerably very high level of ambition in Europe in terms of both our climate objectives, but other sustainability related objectives in terms of sustainable finance. And in particular, because of the urgency that the adoption of the regulation on sustainable finance disclosures by financial market participants creates. And the clear message we are getting from investors and other financial market participants is that the information that they need in order to comply with their disclosure obligations that are set out in that regulation is currently lacking, and that they need better information, higher quality information, and more comparable information from investee companies. And that is one of the objectives that the non-financial reporting directive must achieve. And therefore, there must be a close coordination between the disclosures that investee companies make under the NFRD and the disclosure, the information that investors need in order to comply with their obligations under the disclosure regulation. So that's one clear link. And as I mentioned before, there are others. There is the taxonomy regulation and the work that our colleagues are doing in DG Justice on notably due diligence on environment and human rights. And therefore, we are trying to ensure, and we have asked EFRAG's task force to take into account all of those initiatives in their analysis of how future standards could be developed. So are clearly going to be, I anticipate, an important element of the future review. That is, of course, subject to confirmation formally by the College of Commissioners, and nothing is official until the College of Commissioners adopts the proposal. But that is certainly an assumption that we are making in our work. Secondly, on the scope of the legislation, again, a very clear message that we are receiving from that we have received from the public consultation is that the reporting obligations under the NFRD should be broadened to a wider range of companies. That would include most large companies, including probably large unlisted companies, but also perhaps a wider range of listed companies. So that is something that we are currently assessing. And it may be that I think it is unlikely that we will cover all SMEs in the scope of the directive in the future. But nevertheless, one of the questions we have asked in our public consultation, and one of the possibilities that we are examining, and again, we've asked the EFRAG task force to look at this, is the possibility of perhaps adopting simplified, perhaps voluntary standards for SMEs, because SMEs are, even if they are not subject to legal disclosure requirements, increasingly they are also being asked for this type of information, whether it's from their banks or from their insurance companies or from their clients, which may themselves be subject to legal statutory disclosure obligations. So that is something else we are looking at. Thirdly, reliability of the information, which is perhaps of most direct interest to Accountancy Europe and to the audit profession, is clearly another important issue. And this is something, this is another area in which standards can play an important role, since the adoption of common standards in Europe should hopefully facilitate both the assurance of non-financial information, but also the enforcement of non-financial information by supervisors. And therefore, one of the issues that we are also looking at in the context of the revision is whether we should have a higher level of assurance on non-financial information. Again, this is an objective which in the public consultation was found a lot of support. There were different views about the extent to which non-financial information should be subject to assurance or audit, whether limited or reasonable and so on. But clearly, the current situation seems untenable in that the directive currently, as Noémi has said, effectively only requires an existence check, even if some member states have gone further. And again, as Noémi said, 3 member states have imposed a full audit requirement on non-financial information. As I said, this is the availability of common and more detailed prescriptive standards will also, or should also, facilitate enforcement. It's very difficult to enforce a very general piece of legislation, and also facilitate supervisory convergence in Europe, which is also something that is important from an internal market perspective, and to ensure a level playing field for companies operating across Europe. And then finally, as I mentioned, I wanted to briefly touch on the relevance of the European single access point that we are working on. The Commission announced in its Capital Markets Union Action Plan, which was published in September, and it's action 1 of that action plan, that we would make a proposal by Q3 of next year to establish to establish as a European single access point to facilitate access on a seamless EU-wide basis to information that companies disclose to the public. Clearly, we want to build on some of the provisions that already exist in the Transparency Directive, and that, of course, includes the disclosure of annual financial reports via the so-called officially appointed mechanisms, which are registers established at national level. And as part of that, to the extent that non-financial information is included in annual reports, therefore that information would also be accessible via this new platform. So there have been calls for a specific platform for ESG or sustainability related information. My view is that we should not fragment or segregate this information from other types of information that companies disclose to the public, because all of that would achieve is to force users to go through different places to get different categories of information. So hopefully the SAP can provide a comprehensive disclosure and access mechanism to information that is disclosed by companies, including non-financial information pursuant to the NFRD. So I'll stop there, Noémi, and if there are any questions, happy to take them.
Thank you, Alain, for this very insightful speech. We have indeed a few questions from the audience, but we may have also questions from our next panelists. So if there is any, if anybody from our speakers want to ask a question, feel free to let me know by waving. But I can go to the questions that we have on Slido now. I know that we have a few. A question on this assurance that you mentioned, Alain, on the fact that the current situation, the current status is not tenable. There is a question on the fact who should provide this potentially. I think nothing has been decided yet, but potentially new mandatory assurance, and what quality criteria should they meet?
Okay, thank you very much. What is the added value of assurance? Well, the clear message we're receiving from investors is that ESG or non-financial information today is becoming as important for investment decision making as financial information has been in the past. In some cases, I've even heard investors saying, look, 80% of our decisions are based now on non-financial information. It's quite a broad concept for some people. And if that is the case, the question arises, why should we be subjecting financial information to fairly strict assurance requirements, but not non-financial information? Again, as I said before, one of the very clear messages we're receiving from the investment community, but also from others, from other users, NGOs and civil society representatives, is that there is a real issue with the reliability of non-financial information that is currently disclosed by companies. Some do the job, but unfortunately, it is certainly not the majority of companies that are currently subject to the NFRD. So the added value of assurance is to ensure that that information is reliable, certainly more reliable than it is today, and perhaps at some point, at least in part, as reliable as financial information is today. Who should do the assurance? Well, currently the directive leaves quite a degree of choice, and in some member states there have been specific mechanisms or that have been instituted. My view is nevertheless that if we are going to move towards integrated reporting, then it makes sense for both the financial information and the non-financial information also to be audited or assured in an integrated manner, and therefore the logical candidate would be the audit profession. But again, that is something which I suspect will be subject to a fair degree of discussion during the legislative process, maybe even during the adoption process by the Commission, and we will have to see exactly where we land on that. I haven't really entirely understood the question about the quality criteria. I've mentioned before that I think it's obviously assurance is much easier if we have a more detailed framework or standard to assure against. So that in itself will provide a kind of benchmark for assurance. Whether there was something else intended behind that question,
I think it's very much linked to you know, which professional standards of this new profession, in a way, this assurance profession that would provide this type of services. What type of criteria should they meet in terms of supervisory aspects, professional standards, etc. I would read it like that.
Mm-hmm. Well, I think there are some obvious ones, such as independence from the company, professional skepticism, and so on. Again, if the choice is that the audit profession should be the candidate to do this assurance, then presumably that would fall under the normal, the current supervisory framework or oversight framework for the audit profession too.
Mm. Okay, great. We have also a question on the scope, on this enlarged scope that you hinted to for the non-financial reporting. Which criteria will be used to define the enlarged scope? I would assume this is still under progress.
Yes, we are. We are still working on this. I think there are two main criteria in line with the double materiality perspective of the directive. From the point of view of financial materiality, of course, you want to include those companies that are within the investment universe, in particular of the financial market participants that are covered by the disclosure regulation. Again, the message we hear from that community is that this is currently not the case. But you also want to look at the other direction of materiality, which is the impacts that companies have on the environment and society. And there, whether a company is listed or not is not necessarily a particularly relevant criterion, or whether it is a public interest entity or not is not necessarily a relevant criterion either. And therefore, there is also a likelihood that we might expand the scope into at least large non-listed companies.
Okay, great. And maybe a last question from Victor Van Horn from Eurosif. The IFRS seems to have limited ambitions, so the IFRS Foundation, financial materiality only and climate only. It may help internationally. How relevant would a standard setting body be for the EU?
Thank you. No, it's a very good question. The point about the scope is a very good one. The non-financial reporting directive covers a very wide scope of issues. Certainly, it goes far beyond climate, and it has very clearly already a double materiality perspective. So a standard which focuses only on climate and only on the financial materiality perspective is, for that reason, going to be only a partial answer to the needs of the non-financial reporting directive. Nevertheless, if I can maybe deal with this in a slightly more general way, to me it seems quite clear that the current situation with voluntary or private sector international standards in this area is not tenable. I've often used the expression alphabet soup. and there is a real alphabet soup of standards and frameworks out there. This is not the situation is not getting any better, because in fact new ones are emerging on an almost daily basis.
But some are merging, right?
Well, there has been an announcement indeed of the merger between two, but that doesn't mean that more frameworks and standards are not emerging. I mean, we're all aware that the World Economic Forum and the International Business Council proposed something in October, and there are others who are working away on their own disclosure frameworks, which have not yet gone public. But I anticipate that they will in the future. So this kind of situation is untenable. I think it creates a difficult situation both for investors, for other users, and for companies themselves. So to the extent that any initiative can try to put some order and facilitate convergence amongst all these different private voluntary frameworks and standards at the moment, that would be a good thing. But as I said, we in Europe face a very specific context. First of all, there is a context of urgency because of the implementation deadlines of the Sustainable Finance Disclosure Regulation. We have also, as I said, a wider legal framework within which any future standards need to fit, and they need to be consistent with the requirements that come from that wider legal framework. And I have to say also that looking at the experience in the field of financial reporting, I would anticipate that because of the political sensitivities around many of the issues that we deal with in the field of non-financial reporting, such as human rights and employee rights and so on, there is likely to be a wish for quite substantial political accountability of whatever standard setting mechanism we choose. And I think there's a question about whether an international standard setting, an exclusively international standard setting mechanism or process can really meet that. But as I said before, that doesn't mean that developments at international level are not helpful or that they're irrelevant. They're not, because clearly to the extent that work can be done at international level, that provides perhaps a foundation to build on, and clearly greater convergence at international level would be something worth pursuing. It's not necessarily the entire answer, nevertheless, from a European point of view.
Okay, thank you very much, Alain, for your participation to our webinar today, and we hope to be able to continue this conversation with you in the upcoming months. Thank you very much. You may stay with us or not, as you wish, or as your agenda allows. Okay, perfect. Thank you very much. Have a good afternoon. So I am happy to continue this. I'm going to share here, so I just need to find my right button here. We are going to continue our menu with our panel discussion as announced earlier. We have distinguished panelists today, and we will start with Julien Rivals. So Julien is our Vice Chair on NFI Assurance at Accountancy Europe, and he's also co-head, I'm looking at my notes here, co-head integrated performance at Deloitte. Julien, would you have any first thoughts to share with us in order to kick off this panel discussion?
First, hi everyone. Thank you very much for this great panel and the great panelists. We had a very interesting introduction, and thank you, Alain Deckers, for it. I think it clarifies some aspects, and especially the question we may ask today during this panel and this discussion. Before entering to that questions, let me allow me to make some just a clarification, because I think there is a key confusion, and we have to pay attention about that, about the what we call the subject matter, the fact that we talk about non-financial information, which in fact is totally a fake name. It creates a lot of confusion. Non-financial information is not non-financial information. It's rather ESG related, non-financial and financial information. And as Alain said it in the introduction speech, these two information, non-financial and financial information, are more and more connected, integrated. So we have to avoid, and to take his words, we have to avoid to make a new segregation. That's not the perspective of the evolution of the corporate reporting. It's a fake name, non-financial information, because of course there are a lot of potential financial impacts on ESG aspects, and we see that every day with now some new loans that are where some ESG criteria are used to define the level of the rate. You may find in some companies and in more and more companies some top executive bonus and remuneration that are based on ESG performance. So you see that on the ESG factors have directly some financial impact, and it's going to be more and more like that. The best example is the taxonomy. If you look at the taxonomy, what we'll have to disclose the companies in the future is not only information about the GHG emission or waste production or whatever. It will be information about the turnover, the green turnover, the green OPEX and CAPEX that will be of all the companies that are concerned by this European taxonomy. So non-financial information, we have to get rid about that, and we have to call it clearly ESG-related financial and non-financial information. Let's talk about ESG information. Now, when it comes to assurance, in the context that has been presented by Alain of the revision of the directive and the questions about standards, about the evolutions of the regulation and so on, I think we have to keep in mind four main questions. And we have today to discuss about these four main questions that are very key and strategic to shape our common future. The question is, why? Why do we want an assurance? Why do we need it? Why? Where does it create and add value? Because if it's not useful, if it doesn't create value, add value, then it's just unuseful, and we don't need any assurance. What do we want to? Of course, it's about: do we want an assurance to comply with regulation? Do we want an assurance to fight greenwashing? Do we want an assurance to give trust for financial markets and stakeholders? Do we want an assurance to contribute to the improvement process on sustainability management? Do we want an assurance to give confidence to decision makers and top executives? There are many reasons to ask for assurance, and we have to clarify that. The second question is, what do we want to assure? Is the question about what we call the subject matter in our standards, in our audit standards. We have to clearly clarify the subject matter. And as it has been also said, the ESG is very wide. The ESG information can be financial and non-financial information. It can be retroactive or future-oriented. It can be qualitative or quantitative. It can be about the means, the process, the risks, or about the results, the impacts, the achievements made by the company. So you see that we have to clarify. We cannot say just we need an assurance on ESG information. We need to say which type of information has to be assured by somebody, because it's useful for some intended users. The third question is, how do we want to provide this assurance? And I want to clarify something about a potential misunderstanding about the level of assurance. The level of assurance is not a level of quality of the information, is not a result of the quality of the information, is not the consequence of the quality of the standards. The level of assurance, at least in our current norms and standards we use, is about the work effort you ask to provide the assurance. Is about the level of responsibility that is engaged by the assurance provider. So rather you are on, as it has been said also, on the limited assurance, which means that the responsibility and the work effort is limited, or you are at the level of the reasonable assurance, which is something close that what is done on the financial information. But keep in mind that it's not a question of standards. In both options, we need strong standards to provide a robust information, and we need process and robust norms and protocols to establish this information. The fourth question, I'll be over for this introduction. It's the question of who will provide this assurance, and of course there is the question about the skills, and we see that we need new skills in a sense, because we need skills on climate, on circular economy, on human rights, on many aspects. We also need strong independence rules, and we need potentially to adapt some existing standards. What may, of course, and I don't want to appear as self-serving and promoting our profession, but what we already know is that we have currently in our profession, we have the skills, we have the independent rules, we have the standards. And for us, you mentioned in the introduction the fact that it was a kind of new profession. It's not at all a new profession. It's, for me, a natural evolution of the statutory audit profession. So it's totally, as the corporate reporting is evolving with new type of information, the statutory audit work is going to evolve with this information.
Okay, great. Thanks, Julien, for this introduction and a very useful, let's say, discussion around the names and concepts and the assurance profession aspect. We need to learn more about what investors actually think, right, Julien? Because it's for them that we are providing such assurance.
Not only for them, Noémi, not only for them.
Not only, but for them as well, mainly. So Angélique Laskewitz from VBDO, a very recognized Dutch NGO representing responsible investors. Angélique, what all of this conversation make you think about and bring as thoughts to you?
Well, thank you. Good afternoon, first of all, and thank you for the invitation to participate in your panel this afternoon. Yes, my name is Angélique Laskewitz, and I am the Executive Director of VBDO, the Dutch Association of Investors for Sustainable Development. And well, let me first introduce VBDO. We encourage financial institutions to perform better in the area of sustainable investments, and we stimulate listed companies to make their own business operations more sustainable. And we exist 25 years this year, and we were the first association of shareholders in the world to discuss sustainability with companies. It was and is a challenge still, but VBDO stayed true to its original founding mission. So you can imagine how difficult it was to hit the right sustainability chord when no information was available to draw from 25 years ago. And since most companies were not transparent at all about sustainability issues, transparency became VBDO's first theme. good reporting is crucial to transparency, and standards are needed if companies are to be benchmarked for their performance. So as a start, we focused on encouraging companies to report on environmental issues. As time went on, we received more support from outside our organization through new sustainability guidelines and standard setters such as the GRI. In fact, our call for reporting standards was a major reason that GRI decided to base itself in Amsterdam. A lot has changed over the last 25 years, and sustainability reports and policies are now much more common. A greater proportion of companies now understand why topics such as climate change are relevant to businesses and investors. So they expect to be challenged on these topics. And there is currently an array of standards and guidelines and frameworks that have been created by global bodies. We know them, IRC and GRI, and also the US-based SASB. And of course, we all know the EU's non-financial reporting directive with its ambition and requirements. But there is no one globally accepted set of standards that is appropriate across all forms of non-financial information. And as things stand, investors are not always in a position to compare companies. This is why globally recognized standards for non-financial reporting make perfect sense. Investors who are increasingly aware of ESG-related risks are going to view companies that comply with these standards more positively than those that are less transparent about how their business is governed and their environmental and social commitments. So yes, is non-financial information important for investors? Sure, yes. And this is also recently confirmed by research of EY among 300 investors globally. And this research reveals that the vast majority of investors say they usually conduct a structured review of ESG disclosures. And investor scrutiny of ESG factors is high due to the importance of ESG performance in how companies drive long-term resilience and respond to the global pandemic, for example. The vast majority of investors evaluate non-financial disclosures, and even more important, the research also found a major commitment from investors to move to a more strict evaluation. So this year, 72% compared with 32% 2 years ago. Well, and then some, so we can conclude, yes, non-financial information or ESG information is important. Then some remarks regarding assurance of the non-financial information. ESG assurance practice is currently limited. Only some market leaders have it in place. To be honest, estimate around 20% of the ESG data reported has external assurance. But 75% of the investors say there is significant value in independent third-party ESG assurance. So for investors to understand the strength of a company's resilience, they should have insight into the ESG risks that companies face and how they intend to manage them. So credible and trusted ESG disclosures are therefore important, and assurance is needed to address key risks, reputational and financial risks, and increase transparency to support the flow of capital to green behavior and green products. I'm not sure if auditors and accountants are prepared for their tasks right now, but this is a matter of time and education, I think. So it has to be in the university courses and training sessions, but that's just education, but it's quite a lot, to be honest. So to conclude, external assurance on all kind of non-financial information is feasible. and needed, and should be common practice, in my opinion, and of the investors. So to come to added value and to create competitive advantage. I think these were my statements for now.
Yes, perfect. Yeah, perfect. Thank you very much, Angélique. And actually, I have already noticed that there are a few questions for you for later. But from the audience, because the investors, view is very important for our audience. Yeah, NFI assurance or ESG assurance is a journey, and we are on it. We can't travel anymore, but this is a journey that we are on. So let me thank you very much, Angélique, and we'll see for the questions later. So I am happy to introduce our next panelist, Patrick de Cambourg. Welcome, Patrick. And Patrick has, as I said, many hats in life, but today he's with us as chair of the European Lab project task force on EU non-financial reporting standards that was already mentioned by Alain earlier today. Patrick, the floor is yours.
Thank you, Noémi, and good afternoon to you all. First of all, the usual disclaimer: in spite of the cap that you put on my head, I have to say that I am not speaking on behalf of the task force, which is currently working on many topics, including verifiability, auditability. So I would mention that the views that I'm going to express are personal and maybe somehow inspired by my past as an auditor for a certain period of time. I mentioned the fact that in the task force, we are not asked to suggest or not the existence of assurance. This is, quote unquote, a political decision. However, in our remit, we have certainly introduced the question of what would be the qualities or the characteristics of non-financial information, and as a consequence of standard setting, in order to allow for a proper audit, which I call auditability. And in addition, I wouldn't like to preempt on the discussion that will certainly take place, because the task force turned to Accountancy Europe in order to get a level of advice on two questions. The first one is how to make interconnection between financial and non-financial or sustainability information work. And the other one is precisely auditability and level of assurance. So I sincerely hope that Accountancy Europe will be in a position to contribute, and I know that you are working on it. Now, on the substance itself, and again, in a very personal capacity, I would say the following. Point one, I have absolutely no hesitation. Mandatory assurance is a huge plus. And because where it happens, and you know, we had the journey on financial information. So, you know, we have many years of experience about that. And we know that proper standard setting and proper audit procedures are foundational for quality financial information. This is not a perfect world. There are mistakes sometimes, but all in all, can we imagine a world where there would be no accounting standards and no governance rules and no audit or no supervision? I think we would be in a very difficult world. So it's first of all a key factor, a key success factor for quality. The other point is that quality is paramount to create credibility. And in this respect, I would say that, you know, investors have been mentioned, and I am not underestimating their influence. I also want to mention that in the EU, you have we have a broader spectrum of stakeholders to take on board in this respect, and we also have an underlying definition which is very key, which is the definition of double materiality. So you have to be credible not only vis-à-vis financial investors, but also with other stakeholders. And by the way, through the rebound effect or the boomerang effect of ESG matters, you can find yourself even on the financial side with unintended consequences. So, you know, all of this is just mentioning this because there is a broad spectrum. So once I have said my first point, which is mandatory assurance is a huge plus in my view, there is a key question that is certainly in our task force remit, and on which I have clear, I wouldn't say hesitations, but I think you need to clarify. I think that everybody would require a clear, you know, playing field in order to avoid what could lead to disappointment or to, you know, an expectation gap. I'm old enough to know that in the past, but still, we were talking about an expectation gap on in the space of financial information. So, you know, being old enough, I don't want to duplicate this situation, and, you know, make people believe that the level of assurance that can be given is perfect. Of course, you can have absolute assurance, like, for instance, yes, there is something that is called like a non-financial performance statement in the publication of the companies. That's absolute. I can have 3 words and a little document called that way. That's absolute assurance. But that level of absolute assurance value is, sorry, limited. I use a diplomatic word. So for me, the fine-tuning of the level of assurance that will be given, that should be given to non-financial information is a key topic on which we need to concentrate. And I would like to offer a number of key questions to my co-panelists and also to the audience for us to think about it and maybe exchange views. The first one is that obviously you have 2 big categories of information, of assurance, sorry. You have positive assurance and you have negative assurance. At personal level, having considered that, I would say to start with that I feel reasonably comfortable with a positive assurance on retrospective information. You know, the interest of retrospective information is that you are talking about events that occurred. So you can testify that an event has occurred, and you can testify that the consequences are this or that, following guidelines with a lot of processes and everything. Now, for forward-looking information, I quite frankly struggle a little bit. Because, you know, there is a proverb which says, the difficulty with the future is that it's difficult to predict. So even with good assumptions, even with big efforts, I would like to take Julien's words there we might have an element of difference when he says it's a matter of work effort. Yes, to a certain extent, but if I want to be in the Olympic Games, whatever the work I perform, you know, in the next Olympic Games, I won't be able either to run the marathon or to swim, you know, in a way that is competitive and that will be in absolute terms, you know, so I can train 24 hours a day. I won't be able to do it. So on certain matters, I struggle with positive assurance. For a number, and I would like to put a number of additional questions on this. On financial information, we are mostly retrospective. And when we use prospective information, it is to confirm or to cast doubt on the retrospective information due to things that have been paid or events that have occurred. And more importantly, the space for financial information has well-defined borders. We know that we are addressing only monetary information plus some qualitative, but that qualitative information is qualifying the figures. We have borders and we end up with a balance sheet, a P&L, and a cash flow statement. So, you know, it's a closed world, if I may say so. This is the strength, and it is also the limit of financial information. But that creates a playing field where you feel extremely comfortable because you are mostly retrospective and you can have a final performance statement or a position statement which is well defined and which is also inspired by the concept of true and fair view. And the true and fair view, you give an opinion as an auditor on these statements as a whole. So if any item is misstated because we have misstatements, okay, the question therefore becomes, is it material to the overall picture, the depiction that you are giving via the P&L or via the balance sheet? And if it's immaterial, small, reasonably small, then you say, okay, as a whole, no problem. Now, in the financial information, since you don't have a summarized performance or position statement, a synthesis of all that in one figure like profit or equity, you end up with a problem, which is that your opinion is going to address each and every bit. So any misstatement of one bit could be a problem. And also, you know, I would like, I know that there will be a very committed company after me. So I am asking myself how far the governance of reporting entities will go in terms of giving an assurance, because the first level of assurance is given by the management and the governance of reporting entities. So how far will preparers and the governance of preparers be ready to go in terms of, you know, future forward-looking information? So therefore, we see that there might be, and this is a bit dangerous, so could be dangerous, we see two levels of reasonable assurance possibly emerging. One level that says, yes, the statements give a true and fair view of the financial position or the sustainability position. And the other one we say, we don't give a true and fair view opinion, we give an opinion on the processes which have been followed, but we don't give an assurance on the outcome. And if you create that in the eyes of the general public, reasonable assurance is of course understood as it is understood for financial statements today. So a high level of assurance. So if we create a double level, we have to be careful about the interpretation and the responsibilities of governance and the responsibilities of auditors. Because, you know, again, we cannot, we cannot promise the impossible. And so when people say, oh, okay, I can reasonably assure that people have taken great care of someone, in fact, like in a hospital, you make your best efforts, but people die, you know, some others survive. So we cannot say who's going to survive for sure. So that's the difficulty which I see. And I am very careful about not creating an expectation gap, because if you ask people, do you prefer to be rich, good looking, and in good health? Automatically, what do they say? Oh, yes, of course. And as a consequence, of course, people would love to receive a good level of assurance on future, on forward-looking information. They would love it. And people, some people that have some sort of an extremist view say, hey, it's the responsibility of management to make it happen. But you know, you have so many factors. And the auditors are in between. So, you know, again, very strong on monetary assurance, very strong on reasonable assurance on, you know, from the top of my head at this stage, very strong on positive assurance on retrospective information, sustainability information, but pretty careful with forward-looking, with the level of assurance on forward-looking. That doesn't mean that you don't do anything, but you have to be careful. And we cannot play on words. I mean, coming from the profession, my recommendation to the profession would be not to play with expectations.
Indeed. Thank you very much, Patrick. And I can tell you that the expectation gap is still very much discussed. So I completely see what you are referring to. Maria, I think that there was a call in Patrick's first remarks on how it works in practice, and I know that you have a wealth of experience in a company. So you are ESG Senior Advisor at Titan Cement International and a board member at CSR Europe. What is your take on this conversation, and do you have any practical challenges that you have faced?
Good afternoon from Greece. Thank you for this great opportunity to be in this great panel and with such a vivid discussion. There are many questions placed in our agenda. Allow me to say that here I am to contribute with my experience from Titan Cement International, a heavy industry operating in Europe for many years, but also operating beyond the European borders in the United States, in Egypt. So with experience from the different environments that both financial and non-financial or ESG or sustainability related or CSR related or whatever we call it is really becoming now a key competitive edge, allow me to say, because this is today a real clear view of what it is. It is a competitive edge, and it is so because we have entered in a transition phase. And when I started working a couple of years ago on this field, we were still talking about Milton Friedman's approach to business performance, which today we have completely forgotten. And today we are talking about a different approach, both from the side of business, but also from the side of the markets. So Titan, being a heavy industry, producing a product that is gray, although very useful for society, we cannot live without it, but we still, let's say, think that it is one of the products that is damaging our environment, and is of course the way we use what we use and the way we do things. And we talk about today exactly about the way corporations are doing things. And this is what we try to define. how the way we do things, how the way we behave is influencing today and tomorrow. For sure, we need to find the right words. And for sure, using terms like non-financial or terms that are increasing confusion among the different audiences is not good. So we have to solve this problem and to agree on that, and this will be critical. At the time, we started reporting non-financial performance in 1983. We issued a social report then to communicate to employees, particularly, and other key stakeholders, how we build value in the long term. And it was critical to explain that, because a heavy industry is an industry with long-term perspectives. And I think our example of reasonable assurance for the last 13 years, it was because of that. Because we are a company with a culture that is focused on values and long-term value creation. And for us, it was very important to build trust with our stakeholders as it was to build trust with shareholders. It was of equal importance. In some cases, we call it our social license to operate. So 13 years ago, we were already reporting ESG information in our complementary to financial report, thematic report that we were disclosing every year. We decided that having independent assurance to review how we apply the principles, how we perform against our commitments that were publicly taken by the board and the top executive team of the company, would be an exercise to help us improve. So we considered that the independent assurance at a reasonable level to check, to make a critical check every year how we perform against our own commitments could be nothing better for us that one of our corporate values was continuous improvement. And allow me to say that it was not easy. It was not without a lot of investment to build our internal capabilities, to build our systems, to build our understanding on the different aspects of corporate social responsibility and sustainability, along with the efforts from the independent auditors who should have to combine both the attributes of the accounting professional, but at the same time to have sustainability background and competencies related to the subject matters that they examine. This could have never been, of course, achieved. And allow me to say that it was a long-term effort. It didn't happen in 1 year. Before we conducted the first audit, the first assurance process, it took us 7 years, building our systems, testing our systems, seeing the results, testing and checking the results, calibrating and improving our knowledge and our expertise in all material subject matters. And allow me to say that yes, it can happen. We need to define what. One aspect is, of course, as I said, the principles we apply, the way we follow the standards. These questions should be raised. No letter of assurance can be credible if it doesn't explain whether the claims we take that we apply GRI or whatever else is really applied properly. The second, of course, is what are the material issues? And this is another area that we need to include in the assurance process. Because in order to identify material issues properly, I need to engage with stakeholders. This is also something that can be tested, can be monitored, can be proved with evidence. And on top of that, because seeing is believing, when the auditor has the opportunity to visit the operations, to test not only the processes, but also the commitment of the people from the top to the bottom, and answer certain questions by looking to all different functions and operations of the company, from the procurement department to the sales, from the legal department to the CEO and the board level, then yes, after that, can have a valid opinion whether the company is really meaning what it says, to avoid greenwashing through the report, to avoid greenwashing through the assurance process. And this is important, really. This is what is expected from us to be done. And this is what, in the long run, not within 1 year, will give certain feedback with qualitative standards to our stakeholders, to let them compare and benchmark the corporate performance year to year, first of all, and see themselves that what is promised, the expectations that are created are really met. And on top of that, provide feedback, meaningful feedback back to the companies that they can then incorporate in their future strategy, because this interaction is what we should look for at the end of the day. We are all together in this. So we have to work together, and all different parties need to build, first of all, internally, and then to build in the ecosystem, within the ecosystem, to further advance. I don't claim it is easy. All the questions raised by all the panelists are valid. But this is what we have to change to make the impossible possible within certain, let's say, and commonly agreed frameworks and boundaries. Not themselves. Standards cannot build that themselves, no matter how good and various and multidisciplinary may be, they will not really give us the answers about what each company should do in the context that it operates, and how year to year is really meeting its own, first of all, expectations and ambitions, and then the ones that has shared with its stakeholders. The difficult part, allow me to say, is how we can do that when we look to a period, and this is mandatory, that cannot be limited in 1 year. This may build a different relationship, undoubtedly, between the corporations and the independent assurance providers. And this should happen within certain conditions. But in order to safeguard independence at the same time, it is where the assurance process might include, at the end of the day, a more active role from stakeholders. And these are the qualitative aspects that we should think further in order to allow this to become a process that will be really pushing positive growth and not create more and more bureaucracy, more and more obstacles, more and more difficulties. Allow me to close this by saying that today, like Titan, we have approximately 20,000 companies in Europe doing more or less the same effort. Another 25 million are not doing anything. So the real focus should be to all of them that should be engaged in this process. And second, how this will become as simpler as possible without additional burdens related to bureaucracy and related to costs that are not really creating any value, real value for the companies and the markets.
Thank you. Thank you very much, Maria, for all this insightful perspective from a company. I have already a lot of questions for you, panelists. So let me show a few on the screen. I think we can start maybe with two for you, Maria, especially linked to. So there is one that was quite interesting on internal controls. Let me see. Yeah, this discussion on the level of assurance also emphasized the need for adequate internal controls related to ESG information. And I think that, Maria, you would definitely agree with that. Is there any panelists that you would like to react to this?
I may go ahead on this one because I find it interesting, especially with these questions and what has been said by Patrick on the question of the responsibility. And I find it very interesting because there is also a potential perception gap on the fact that we cannot strengthen the auditor's responsibility without strengthening the management responsibility. And as a lot of you may know, the maturity of ESG information is not at the same level. I would say that the financial information, of course, it's a more recent information, so we don't have the long-term experience on that. And people that are providing this information are not used to do that most of the time. So, and then don't just do that, like it's the case on the CFO's department for the financial information. So there is a question on the internal quality, which is a real good one. And it's interesting when we have this debate today on assurance that we also talk about internal assurance and controls. So that's a really good thing. And we have to keep in mind that external assurance is made in parallel with a need of internal controls. The second point I would like to mention is maybe based on what Maria said, is about the challenges we have to face. I think, and especially on the quality of the data. I think there are many key questions where we have collectively to propose some answer, and maybe it's part of the standards and the standardization process. But there are for us the key difficulties we meet are the question of the period of reporting. Do we have to be totally aligned with the financial accounts when we are talking about, for in this case, non-financial information? The question of the scope, the consolidation rules to provide this information. They might be exactly similar because it's not, as Patrick said, it's not the same type of information. It's not monetary information for some, or at least a lot of ESG-related information. So the scopes of reporting and the consolidation rules are not exactly the same. So what is possible, what is not possible? Is it possible to just provide information on half of the activity of a company? Because it's the case today, it's what we see today. If we ask us an assurance on this half part of information, can we deliver it? That's concrete question. I mean, practical question we have to answer right now. It's my day-to-day life is to answer this kind of questions. And the last one is about the definitions. When companies, as we all know, there is no standards. There are some private ones. Some are suitable standards, suitable criteria where we can provide assurance on them because they are robust enough. Some others are not. So there is this question about how we define the common definition is, of course, linked with the EFRAG work and discussion we have right now. And the last key question is, what do we do about risks? We are most of the time asked to provide a point of view as an auditor about the ESG risks that are facing the company. Can we deliver an assurance on that? With the question mentioned by Patrick also, do we provide an assurance on the process that came to the point that some risks have been identified? Or do we provide an assurance on the precise list of the risks that are disclosed in the annual report, and the fact that they are, I don't know, good for us, which doesn't mean anything. So we need for that, we need also standards and clarify and avoid any type of perception gap on that very important question. What do we do on that specific aspects of defining and challenging what the company defines as and material information? Sorry, I've been long.
No worries. I think that we have two panelists that want to react. Shall I give the floor to Maria maybe first, because I think it's very much linked to the practical aspect of the assurance and reporting.
Thank you. And because from the questions, it comes clear that to define what we try to test, measure, and assure is very critical. We have, as said already, now many different standards. They are voluntary standards, they are global standards, some of them, but there are also some sectoral, industry-based standards. If we look at the standards, they provide us with metrics on a number of ESG factors that are already identified from different sources and stakeholders as material. So all standards, the global, particularly level standards, seem to result in some common ESG factors that should be considered, analyzed, and if necessary, reported by companies. But allow me to say, and one of the questions was about that, it is primarily important to check what are the commitments that are taken in order to measure something and see whether it has an impact or not, or it has an outcome or not. You need to take a commitment. You need to explain what to do until when. So in our case, because in our sector from 2002, the sector itself started setting standards to measure some of the ESG factors that the sector has identified as critical, like climate change issues, related issues, like air emissions related issues, like health and safety related issues. So not only we had some sectoral standards that were focused on real material issues for the sector, but at the same time, we had, let's say, something to test ourselves against. That was 5-year-long targets related to the material issues. So this is the other element you need to have in the picture in order to define what you are testing really in the independent assurance process. So internal assurance is actually doing exactly the same every year and is testing commitments versus targets and performance that is really helping to see where you have to do more, where you have to invest more to achieve progress. And this is an ongoing process. So I think one idea is to make this more easy is to accept that the combination of global and sector-based standards will be what should be expected to be followed by corporations in order then to have a certain system in place to examine each and every case by following the assurance standards.
And Patrick, you wanted also to react, and maybe you want to cover this question as well. The alphabet soup is a real problem. Also, their quality of under criteria are just not suitable for assurance, only high-level principles. I think it's very much linked to what you were referring to just now, Maria, and the relevance of the reporting standards.
I wanted to react to say that at the end of the day, the information will be as good as the value chain which will be followed to create it. And you have many links in the chain. So you need to make sure that each and every link is reinforced and is strong enough, because any chain is as strong as the weakest link, as we know. And to start with, of course, I wanted to react on internal control. Even before that, yes, we have to move out of the alphabet soup. There is a proliferation of initiatives. It's real nice because it offers many possibilities. The task force has identified about 100 initiatives in the field of non-financial reporting. Some significant ones, other topical, other sectoral, and it's huge. When you compute the total number, and even on a restricted basis, of KPIs that are offered, you can find, and we probably are missing some of the sectoral ones, like the cement companies, as mentioned by Maria. We are reaching 4,500. So how can we establish, there is a need for coherence. And the standard setting, even if it was consolidating the existing KPIs, we would see that we have to make a coherent set of relevant KPIs, both qualitative and quantitative, and both quantitative monetary and non-monetary, both retrospective and forward-looking, in order to paint a picture that would be reasonably understandable and also relevant. So the standard setting is a key element, and maybe the starting point. You will also identify places where, in fact, there is very little, like biodiversity, for instance, which is not so developed. So in doing so, answering your question, it's very clear for me that yes, you need to do something, because at the moment the proliferation is not helping. It's good because it's like the vibrant. It's like spring. You have so many branches and flowers appearing that it's wonderful. But at a moment in time, you need to put some order into it, and also determine what is the minimum, then what are the advanced levels that you want to promote. That could be a combination of voluntary and mandatory, etc. So you have lots to consider in order to clarify the landscape. But once you have the standard setting, you have the preparation. You have to have a strategy for businesses. If it's not mandatory, or if it's not fully mandatory, what will be the strategy of governance? How will they decide? How will they implement at each level of the company? It has to be embedded in the processes and the systems of internal control. Then after that, you have another, which is something which I called in the past, an accountability system. An accountability system you have the framework that is to organize accountability. Then you have the governance and management and internal systems of the company to produce information. Then you have the external control. And then at the end, you have the supervision by market authorities. So all of this, constitute a chain, and we need to see, I hope the EU will see it from that angle. You need to consider each and every. And I don't mention for users the single access point and the easy access to a coherent set of data. Because if we do not have that, we can produce lots of information. If it's well hidden, what is the interest? It is for something that we produce information. Sorry, I've been long-winded again.
No worries. I think this is of interest to everybody. So thank you for adding your remarks. We have a number of questions for, maybe we can bring in Angélique again with us regarding investors, because there is some question, Angélique, on the level of assurance, and I'm just going to look at, and if you are, if you really care about the level of assurance that could be relevant for NFI reporting. Angélique, does this?
Well, I think for now, it would be more of interest that there is assurance, external assurance, and if it's reasonable assurance, well, it just states that ESG reporting is free from material misstatement, and limited is well more a negative sentence. I don't know if that's the question right now. I think it should be for listed companies not very easy to have an assurance on the reasonable assurance level. But I think for a lot of companies who are not really, so sophisticated right now with sustainability, it would be limited assurance is even then, if you are a small company, very difficult. So I think it has to do with the size of the company and if you're as well stock listed and so on. But for all listed companies, it should be possible to have reasonable assurance, in my opinion. And from an investor side, that would be, I think, well, of interest. But as said before, only 20% of the ESG data is nowadays assured externally. So that would be the first step. And then the second step, then we can have, a discussion about the level of assurance. But as said, then it would be a reasonable assurance for all listed companies, in my opinion. Yes.
And then it depends on the type of information, as Patrick also mentioned in his introductory remarks. There is one comment that is quite interesting about the process. How could we speed it up? It takes so long to reach consensus when the market actually needs the information now. Is there anybody that wants to react to that?
Well, to speed it up, I'm in favor of speed it up, yes. But I think I told a story about 25 years ago, then there was nothing. But it takes some time, and maybe we have to have some patience if it comes to harmonization of standards. There are standards, and please use the standards, the existing standards. And in a while, it will be more clear what is the best the best level of assurance and the best standard. But at least it is very good to know that we have a discussion about this, and that it's not only the shareholder approach that is in favor, but that we talk in Europe about the stakeholder approach, and that is, I'm happy with that. And but I think, let's estimate 5 years. And then there is the standard.
Maria, you wanted to react?
Really, I would like to suggest how we can speed up looking at that again from the side of the corporations. One very important thing from the side of the European Union and all respective European Union related institutions is policy cohesion. Let's try from the side of regulations and new policies to simplify and to have a better cohesion on the policy level. It will be very important. Then second is, along with a new regulation, let's give motives, initiatives, let's say support particularly the non-listed companies, but who have a significant impact in the value chains, to commit. Let's make it a competitive advantage, as I said in the beginning. There are two drivers that are motivating the companies. One is investors, the second is customers. Both together is competition. That's how we call it. So for me, this is the only way. And then, in order to solve some of the problems we discussed today, let's collaborate to identify the standard setters from the side of corporations. Let's see today who are today the ones who can become role models for the markets, for the sectors. Let's not reinvent the wheel. If we agree what is a mature level of non-financial and ESG reporting today, then we can show to the rest of the companies where they need to go. And we will build from that. For me, this is the only way that we can expect that in the next 4 years, which is the ambition of the European Union as well, all this can become something that will be mainstream and not something like nice to have. Okay, I have a nice ESG report, or I have a nice materiality assessment, or I have a nice reasonable assurance letter that nobody cares or is not valued the way that should be valued.
Patrick, you wanted to react? Thank you, Maria. And I think it will be our last tour of comments, ladies and gentlemen.
No, very, very quickly, I just wanted to highlight one point we have not covered. As usual, it's a balancing act. We need a cost-benefit analysis because depending on the level of required non-financial information, depending also on the level of assurance that is provided, there is a cost related to that. So we need to balance the benefits and the costs. And at the moment, I think in terms of cost, we are nowhere near with the 20% scope as mentioned by Angélique. And in addition, with, you know, somehow maybe an ambiguous level of what it is meant through the level of assurance, we need to perform something that is better. And I think the profession and the preparers have this. And, you know, the Commission has requested from the task force an important point, which is to work to consider a phasing that would be expeditious, but also ambitious. So you need a proper phasing of this. You know, we will not create, nobody in the EU or elsewhere, even elsewhere, you know, elsewhere is even more difficult, create miracles. So we have not to be patient, but we have to be pretty proactive in order to move as quickly as possible.
I'm brave. Let's roll up our sleeves. Yeah. Thank you. We have our MEP Sirpa Pietikäinen that just joined us. But Julien, you wanted to add something before we give the floor for the closing remarks?
Oh, yes, thank you. If I started and I'm going to finish the debate, thank you very much for this honor. Just in one word, I think we have to be innovative. It's a new approach, and we have to think about maybe having some information with a minimum requirement on assurance. And maybe I'm sensitive to Maria's vision on leave a part to the market. So I think we may find a balance between the minimum requirements and leave the markets, and let the markets make things. I think it's important, because if not, assurance will be only perceived as as compliance, and the added value of all what we're trying to do as professional will be very less perceived by the companies, clients, and stakeholders. So I think it's important to leave a part to the market, but to define a minimum requirement. And maybe we can propose a journey to assurance, starting by a scope of work or some subject matter, limited subject matter, and then growing during over the next years. That's so we can be innovative to help companies on their improvement process on that aspect.
Okay, thank you, everybody. That was a very interesting debate. So I am happy now to give the floor to the member of the European Parliament, Sirpa Pietikäinen. So Sirpa, you kindly accepted to give us your closing remarks for this debate on non-financial information assurance. Thank you. The floor is yours.
Thank you very much. And I do regret I did not have the possibility to hear the whole panel discussion. And so I would like to ask you if there's someone who took a note of the discussions, you kindly enough could send it to me, because I really love working with you and the valuable input what the accountants and accounting community can give. And you might have heard that I say quite often that actually, believe it or not, it's going to be the accountants that save the world. So believe on this. And so this is sort of we did this kind of a principled level discussion, and then we know we need very much a deep expertise that you are the specialist. So I really would hope that we could all stay in deep cooperation in the future. Well, you heard about the non-financial reporting directive from Alain Deckers, and about how the taxonomy is going to be proceeding. But before commenting very briefly in some of those points, I would like to start with the principles. And I would be very happy if you could be helpful with these principles and sort of implementing them. The first is treat ESG information as parallel to financial accounting. I'm not an accountant, but I did graduate from the Helsinki School of Economics and Businesses, and did my some of my courses on accounting. And so I think that the beauty of the accounting is that we understand why you need the information, because you need to be responsible juridical person in the society and part of the society, so that you just don't put everything on your pocket and distort the markets and distort the figures what you give. And that relates to, as we all know, to investor protection and everything. And if we take this climate change and other aspects seriously, as we should, nowadays it is even more important to get the validated, good, comparable information. What is the company's impact on resource efficiency, on climate, on biodiversity, on toxicity, on emissions, and whether the tracking is going to go better or worse? And what is its societal responsibility? So if we sort of upgrade it to the next level, this is not the cherries on the top of the cake that it looks pretty. It is the essential core information about the performance of the company. And the company who can't perform on ESG indicators cannot perform as a company. It's poorly led. And it doesn't even have the information itself that could lead its activities. So this is the first part. Treat it as accounting. And that means, and this is my big fight in regulation, the indicators would need to be harmonized. And how you calculate the life cycle analysis, for example, of the impact on the whole chain of production, it needs to be harmonized. Because if you do not have the comparability, it's a bit like you wouldn't have the comparability in accounting itself. You could have nice reports that we're telling how profitable you are, but you can't sort of check whether this or that company or this or that industry actually is performing and how well it is performing compared to its competitors. And in the longer run, and there I very much rely on your advice, is where do we hang that kind of a bigger framework of the standardization? Should it be in the accounting community and voluntary? Should it be in IFRS, one of my candidates? Should we have, at least in Europe, should we start with the EFRAG? Or what is the place? Because we need the place for the standardization. And of course, it needs to be linked with the taxonomy. And then the next point is, and it is as important, and I heard some of your comments, leave some flexibility for the markets. You do not say that 5.6% for R&D is the perfect figure, or the perfect figure for personnel cost is X. You give the information that is comparable, and then you leave a bit of a room for comparison, because it is not only climate, and you can't, so it's not a dichotomy, black and white, it's 50 shades of green and gray combined together. And then if you look at complex issues, like I just pick up the construction, because it is 50% of the resource consumption and over the 30%, almost 40% of the climate impact. It certainly needs to be there. But there you have the resource efficiency, you have the biodiversity. Do you prefer cement or concrete or wood? Depends where the wood comes. How sustainable it is sourced and what are the sourcing mechanisms. It depends how much you prioritize biodiversity and saving the trees for climate change and sinks, and prefer very effective cements, let's say, for example, and this and that. So it's a lot of combination with all these toxicities, energy efficiencies, climate impacts, biodiversity impacts. And this kind of sort of looking one thing leads only to palm oil solutions. This looks like to be a good idea for the climate. And then again, for orangutans and biodiversity, it's far from being a perfect. So there needs to be, and in this very fastly changing and paradigm changing environment, it needs to leave the room for consideration and different kind of assets. That, okay, this company, for example, is putting more efforts on biodiversity and, let's say, on non-toxicity and on this and that and this on that other side. Okay, then the second point is, and this is the big fight I know in various fields, it needs to be audited. And it needs to be on company board and CEO responsibility. So it's the financial information. It's pretty simple stuff. What you say needs to be true, right? And then it is the same on here. It needs to be true what you say. And it doesn't need to be very complicated and detailed. It can be this kind of a sort of list of perform indicators in resource efficiency, emissions, energy consumption, what quality of energy, CO2 emissions, biodiversity, indirect land use, and so on. But it would need to be on the integrated reports. And I understand, and this probably needs to be in the non-financial reporting directive, but as you know, it's not very effective and not very neat directive. And now we are trying to formulate with the scope. I'm a bit skeptical how well we get it there, either with the political climate, you know. And my preference always would have been, let's treat this as accounting, and then it would actually mean you should put the requirements in accounting directive. And via that, you would solve a couple of other responsibility issues, the size issues, and the flexibility issues, how you set the requirements for different kind of companies. So if you can advocate and if you want to ponder this issue, I would be very happy. But there we sort of stand where we stand. Then, and this is something what we would need to develop, and this is not very clear in the non-financial reporting directive or company responsibility sector, where we are having there a couple of other one or two directives coming out from this sustainability ESG responsibility sector. And the question is, what is the impact of the reporting? And you know that the economic reporting, you can't go year after year producing the red line. Well, it was minus 10%, and we are unprofitable again. But so it is the business in this field. You can't be profitable because you need to take some action at some point if you are going on wrong direction. What about then the ESG reporting? You basically too often do whatever you do, and then you sort of classify it, telling how nice it is. And the point directly should be the reporting needs to be linked to science-based standards, the requirements, like you can't make debt, you can't make environmental debt. The companies need to have a transition plan. They say, okay, I'll be sustainable within 5 years or 10 years or 30 years, if that is extremely difficult for some of the companies. But you set the timeline when you have the transition on these science-based goals. And then you meet what is your success on this journey. And this is the reporting. And then if the report shows that you are not that good or the progress is pretty minor, you need to tell, like you would need to tell otherwise to your investors, what are you going to do to correct the negative trend that you are having there? So what is the next steps? Do you de-invest and invest on some new fields, or do you have a new major activities, or do you really think that just sort of producing the coal a bit more effectively would be the solution with this kind of a linear partial improvements on the procedure? And this goes, for example, greatly in the diesel motors, and as you know, and the car debate. Quite often the business takes it, okay, this is what we do, full stop. And you can't demand any more efficiency from the diesel motor. It's not technically not possible. So politicians, please keep out. But then if you say, but you need to do it because the planet can't take it, they say, no, but because we can't do it. And the companies would need to be posing the question more often, is this diesel engine the right solution? And if I can't, with the diesel engine, produce better results, at what time scale I should innovate something else, de-invest, do whatever, something else to produce the cars or the mobility that actually is the service. And this I do not see, I don't see happening that often. And this is something I really would love to see in transition plans, and maybe in the auditing process, not only saying that, okay, your indicators and LCAs are on place, but saying whether you act according to information or whether you just justify what you are doing for the future too, because, you know, the diesel motors can't be any better and full stop. And this is the power of the information. This is the power for auditing, and this is the power for reporting. And this is why I believe that the system, if we get it on the place, really could save the planet, because then when the information is out there and we have the requirements for investors that are pretty worried about the situation already, it actually can make a quite a big change, the biggest, much more faster and bigger than what the political decision making and global agreements as needed they can do by themselves. So once again, thank you. I'm sorry I couldn't attend the whole seminar. I was just in trialogues about the prospectus directive, the exceptions for COVID and all that. So I escaped the place as soon as I could to join you. But I'm convinced we have possibilities in the future to continue the discussions. Thank you.
Definitely. Thank you very much, Sirpa Pietikäinen, for joining us for these closing remarks. I still have maybe 20 seconds to say thank you to all our speakers. I think this was a very good discussion. We still have a great deal of work to be done to ensure consistent and comparable reporting by companies and assurance thereon. And we will continue debating with all stakeholders, including you that represent your party today. Thank you again from Accountancy Europe, and let's continue this discussion in the coming months. Have a good afternoon. Bye.
Good afternoon. Thank you very much.
Thank you.
Thank you. Bye.
Bye bye. Bye bye.